sure he knows exactly how to, like do the rest of the moderation. So please, the stage is yours.
Thank you very much. And we live right now at the verge of certain changes. ICOs were an incredible phenomenon last year. The regulators didn't like it much. Venture capital is still here. So I think what we're going to be talking about is the pros and cons and what's happening in this field in general. But before I do that, I was thinking actually even last night about presenting people who are at the panel. And I have noticed that their resumes or their bios reflect the current times, i.e. it's almost impossible to define them easily because they are doing so many different things. So what I'm going to do is ask them to present themselves very shortly. In my case, I've been always in the financial industry. Most recently, I've been a venture capital founder and manager, and we're investing in early stage companies which are technology driven, and we scale them globally. We do blockchain and VR and big data and all the other smart cities. But why don't we go into what you do?
Thanks. Good to be here. Ethan Pierce. So quick background, up until September I was managing partner for Nest Venture Capital, which is an early stage fund in Hong Kong. That is Southeast Asia's largest accelerator with large companies. So we ran around 35 different accelerators, innovation programs with the large banks and insurers and things like that. So started getting more and more into obviously blockchain powered solutions the past 2 years with a lot of those programs. Today specifically don't partner in Borderless Ventures, which is based in Paris and Singapore. Early stage cross-border fundraising between Southeast Asia, Europe, and the US, and director of the Crypto Assets Institute, which is a think tank around the business of blockchain, the tokenized economy, which we'll talk a bit more about that.
Pierre?
Some of you may have heard a pitch earlier, but my background's primarily from Silicon Valley as an early stage startup co-founder. It was a number of companies I was involved in. I've also exited, and more recently I've been investing as an angel investor, and more recently launched an accelerator out of Russia that's specifically focused on blockchain companies, and now 100% of the time is either enabling other VC partners with their portfolios for ICOs, independent ICOs, and co-founding a couple of my own as well over the next 6 months.
Hi, so I'm John, a bit of a surprise to be in this panel, but I'm taking over for my colleague. I work for a token discovery and research platform called Trivial, which allows people to find out all about tokens before they make a decision to invest in them. I've been investing in tokens for about a year now, but prior to that in Bitcoin and Ethereum. I think the regulatory aspects are really quite interesting, and people have to think very carefully about all of these things before dumping their money into something.
Okay, so now that you guys know who we are, can entrepreneurs raise your hand? Okay, venture capitalists? Anybody from the beautiful government or agency or something like that? Yes, good. Okay, so now that we know everything, I have another question to ask you, and that is, as you probably have seen yourself, most of you are entrepreneurs. If you had a choice, would you prefer to have an ICO or a venture capitalist to fund your development? Can you raise your hands for ICO? And the ones who would vote for a venture capitalist? Interesting. You may be either conservative, or you may have tried before and realized that without a good venture capitalist, it is not easy to develop your company. And ICOs have a lot of wonderful benefits, but they also have one drawback, which is the fact that nobody's going to support you, nobody's going to advise you, you're going to be on your own. But why don't we go now into the discussion? Do you agree with that, or do you think that ICOs, however we call them in the future, because obviously ICOs may be misleading because they sound almost like IPOs, which obviously are for mature companies. So what do you think the future is going to hold for us?
Well, I think it's interesting. There's a very common trend to be anti-VC, I think, in the blockchain community. I get that. There's all kinds of points to talk about that. I think the easiest way to start that conversation is to say that there are a lot of really shitty VCs, and there are a lot of really good VCs. So once you do that, you can actually start to say that there's a reason why you might want to work with VCs, and if you've worked with bad ones, then maybe there's a reason why you shouldn't have worked with them. So there is, I think, a valid reason to say no. I think what's important, though, is to understand if you take venture capital from a good venture capitalist, it's often not the money that matters, it's the network and it's the experience that they're bringing to the project, especially if you're a first-time entrepreneur. And interestingly enough, a lot of entrepreneurs, when they have a great exit and they launch their new thing, they don't self-fund that. Just because they've got 100 million in the bank doesn't mean they put all that into the new startup. They go find investors because they know what it means to have that kind of a team involved in developing their company. So I think one of the first reasons that we can talk about that might be problematic is that ICOs, if you have advisors, they're probably paid advisors. You will learn if you're an early entrepreneur that paid advisors tell you what you want to hear. Advisors that have a vested interest in your project, well, maybe might tell you the truth. So I think that's an important thing to understand. You don't just need the capital, you need people who can help you turn this into a real business.
To play devil's advocate, even though I'm a venture capitalist, if you deal with a venture capitalist, you have to give up equity. You have somebody who's going to be hoovering over your head and telling you how to do things. While with an ICO, you're free and clear. You get a lot of money, nobody checking out on you, you can do whatever you want. All equity is yours. Pierre, do you want to comment on that?
It's funny because some of my best friends are VCs, and I'm trying to help them, particularly early stage ones, benefit with rolling some of their portfolio companies to take advantage of the current state of ICOs for a number of reasons. One, of course, dilution being primary, but also converting any equity into a real solid exit for them, which would reflect well on their overall portfolio. I think I advise a few ICOs, and a lot of them can develop some of these relationships effectively that are needed to guide them if they're really in it to make a solid business. And as my colleague here has pointed out, a lot of the ICOs were a lot of scams, and still remain some in the market. But the ones that really want to operate a solid business, I think, are doing the right due diligence around getting strong advisors on board, not just sort of nameplates for window dressing for their ICO.
So now I'm going to go and play a devil's advocate on the other side, to be fair. If you do an ICO, and then you're listed on one of the exchanges, you have the drawback of having to prove yourself in short term. Because obviously you're being quoted, the price goes up and down. So having patient capital, not only smart, which is what Ethan was talking about, but patient in a sense that you have the time and the patience and the support to develop your, whatever it is, prototype, idea, algorithm into something which is going to be easily commercialized, is a good idea or a bad one?
So I think with blockchain tech in particular, because it's such a young industry, patience is absolutely key. And I would argue that VCs are perhaps not the most patient bunch. Typically, 10 times investment is amazing for a VC. 20 times, brilliant. 100 times, 1,000 times, unheard of. And this is what we've got going on in the blockchain area, where perhaps you're going to get some VCs with the mentality of a 10 times return is excellent. If they can get 100 times, they're going to sell out immediately. And this is why we see a lot of tokens, promising tokens, as soon as they hit an exchange, their value tanks. I think this is primarily because you've got the early investors with a lot of funds putting it in, buying up this token, usually in a pre-sale, before it's released to the general public. And these are the people who are really getting the value from the tokens. Unfortunately, they're not in it for the long term. There are, of course, plenty who are. I'm generalizing a lot here. But there are sort of predatory VCs who have the disposable capital, are interested in it and will just dump. And that's not good for the projects in the long term. So it's better if they can have a sort of mix, if the pre-sale isn't too heavily weighted in terms of VCs.
That's exactly right. When you do an ICO, you have to be fully aware of the fact that a lot of investors are going to go in for speculative reasons. And they will sell as soon as the opportunity comes, and that's going to put a lot of pressure on you. So a general question, don't you think that a good solution would be to have both?
Sorry, I mean both in what context? Both
in a sense of being able, because some venture capital funds have started to participate in ICOs, as you know. Many of them cannot do it full blast, but they have some money that they can pinpoint into these types of opportunities. They get issues at a big discount prior to the public coming in. And maybe that is a good solution, because in a sense you're getting two worlds, or the benefits of the two worlds at the same time. You're getting people who have hopefully a vested interest and not speculators, who have the experience and have built companies in the past. And at the same time, you get the benefits of the ICO, which is a lot of very, very small investors who, in most cases, don't have a clue and are just excited about the opportunity because their friends have made a lot of money.
I think we're starting to see this as well. There's a whole bunch of ways that can go, but you're starting to see, that, for example, pre-sale tokens getting locked up for a year or whatever, so that speculation is not a part of it. People are investing because they believe in the business model, which is really what this is about. So if you're buying tokens just to flip them and make profit, that's fine, but you're not investing. That's not what that is. That's other things. But if you're actually trying to create a value investment and watch this thing grow, that's different. And that's where the venture community is very interested in investing in quality, scalable blockchain solutions. The reason it has not happened up until now as much as it could is because many of these funds, when you have a venture capital fund, it's usually not your money, it's money you've sourced from other investors into a fund that you are managing. That comes with a mandate. And that means when you raise that money a year ago, 2 years ago, 3 years ago, you promised to invest that in certain types of companies, in certain regions, doing certain things. So now that we have token investments showing up, they can't just decide all of a sudden, oh look, I'll put some of this money into tokens. They don't have the right to do that legally, their relationships. So that's why a lot of this has been slow to catch up on. The second piece to that, I think that's important, is just also the idea of this is an early stage. You know, you're a white paper, 3 people in the basement, coming up with a great idea. This is early stage investing. And in early stage investing, there are a lot of things that have to be continually worked through to create an actual viable, scalable product or solution. If the venture community is not interested in giving your blockchain startup money, instead of going to an ICO, maybe you should ask yourself why venture investors aren't interested in giving your blockchain startup money. And learn from those lessons. Maybe there's good reasons. Maybe there's things that they don't like about the project yet that you need to work on. When you have to work on your pitch deck and sell that thing 200 times to a bunch of funds before you actually finally get somebody to say yes, you learn an awful lot. And we're not doing that in this process.
Actually learn probably even more when you're talking to your clients or potential clients, because they're the ones that are going to be your users. But anyway, go ahead.
I think there's basically an opportunity now, because there's so much liquidity in the market, and the way most of the tokenization of the utility tokens are non-equity, that the risk that any startup has going for an ICO is quite low, because essentially they could in a year do another ICO that's completely based on equity-based tokens, because if they do it wrong first time and they get their, in many cases I've seen particularly Eastern European or East Asian startups assume that their hard cap is almost like to a Series C, right, in terms of total raise. So they're accounting for that essentially they won't get any kind of down round at a later stage as part of their, and the other thing I'm seeing now is that the structure of the tokenization is getting a lot more complex, which addresses the problem of institutional, is there a vesting on that token, what's the cliff associated? So there's a maturity of the market, and the companies that I'm advising are a lot more, let's say, a few of them are a lot more complex in terms of the structure than normally that we've seen, let's say, in the last 8 to 12 months.
So what my colleague here says is completely right. You've got some interesting new models coming out that can be utilized by token creators. But something that they should always be aware of is that the failure rate for ICOs is ridiculously high. In 2 years, I think you had, the last 2 years, 26,000. 92% of them have failed. So any investment from the creator themselves and their time and effort and their team's time and investment is really risky. So you've got to weigh this against it. Anyone investing has also got to think about this. That you're not really playing a numbers game here. Because if you start throwing money at lots of projects, chance of picking a winner is slim. You've got to really drill down into the fundamentals. That's the only way that you're going to find a successful project.
There's another interesting aspect, though. If you invest in an ICO, there may be a paradoxical situation in which the company fails, but the technology actually survives and the tokens are doing pretty well, which is something you will never get if you invest in an equity of a company. What do you think about that?
Actually, well, I would qualify that that's not actually true that you never get that, because an awful lot of early stage startups that scale through their early stage funding and Series A funding and then die, the IP that is created in those companies still does live on and contributes either to the portfolio or provides for other projects.
Yeah, but it has to be picked up by someone.
I do think that it's not a zero sum in terms of it doesn't all disappear. Depends on the kind of startup that we're looking at. Well, yeah,
So because in the blockchain world so much is open source, it's very possible that a lot of the projects that failed are just putting the building blocks for the next stage. First thing I do whenever I look at any project is to check out the team, but then go to their GitHub and see what they've been doing, see what projects they're building on, what technology stack they're using, how they've been inspired by previous projects in their area that have failed, and what they're doing that's a little bit new. So for sure, you can always build on the shoulders of giants, but not just giants. You can build on the shoulders of fallen foot soldiers, if you will. People who have maybe been a little bit too early, they've tried something, they've failed, but their technology is still out there, they've helped contribute. And if you do it right, you can encourage some of the community that invested in these failed projects to come to you and to put their faith in your project, because they see how you're improving on something that didn't quite make it.
And what do you think about entities that build blockchains but do not open their source code? Because some of them are being very heavily criticized, but it's still blockchain, isn't it?
So probably one that you've all heard of is Ripple. There are others like Corda, a protocol building for large banks. So you've got these permission blockchains that, from my perspective, I don't like them so much because they're taking away the democratization of investing. They're taking away a key component of blockchains, which is decentralization. But they do have a very valid use case. There's a real reason why Ripple has exploded in value, because it offers something that other blockchains can't. So what they can do is they can work side by side. You can have decentralized blockchains and centralized blockchains, and everything in the middle, really. Private blockchains, permissionless, it doesn't really matter. It's a whole ecosystem, and it's really up to people to seek value in the projects for themselves and to make their own decisions as to whether it's going to be a decent investment. And probably, if you've got the backing of big banks like Ripple has, that's a good sign for a lot of investors that they might want to throw a little bit of money at it as well. You sort of rely on people doing the groundwork for you with some of these more established coins.
I would simply add that in terms of review of, I mean, basically in terms of the portfolio, GitHub and technology is one key aspect, but you know, what we've seen, as you mentioned, you know, 92% of the failure rate for ICOs is astounding, actually. But the companies where I've worked with that have had successful pre-ICOs and ICOs have had 5 of the key variables. One is obviously a strong GitHub and a technology base. 2, strong community outreach marketing, sort of automated or organic. 3, white paper and a strong advisory board. So, and the advisory board isn't just sort of nameplates. It's really deep relationships, either from previous investment, say an angel or a VC early stage, or someone from the business community that's in their vertical that is a market influencer in some way. So these are sort of the 5 key variables I see as a measure of success, whether it's decentralized or not in terms of the blockchain.
Ethan, you want to add something?
I think there's 2 pieces. If we talk about the 92% fail rate, I think we can pull this back into the general lessons that have been learned from crowdfunding in general. If you look at funding a project like a hardware project on Indiegogo, or if you're looking at funding a film or an album or all these kind of things, all of the work, and there is a ton of work to be done. When it is a successful campaign that does 6 figures or 7 figures, that is 6 months to a year of work creating a community that you funnel towards the first day of that launch, and you hit at least 100% of your goal on the first day. And this is there's a process, and if you go through that process, you have a higher chance of success. So I also think that one of the problems we're seeing with a lot of this is people, you know, cutting and pasting a white paper, not putting a lot of original thought into it. And that means there's maybe not a great solution already to fund, but more importantly, this is why we also will see crappy solutions get funded well, because this is a marketing activity. This is about creating a community. It's about getting them passionate about your project, about getting them motivated, and then they contribute. And that is something you can do. Why are lousy songs on the radio? Why are lousy films in the theater? Why does bad stuff sell? Because it's marketed well, and an ICO is a marketing activity. So you are very potentially just doing that part right. So this is sad because you're either badly marketing a great technology or wonderfully marketing a piece of crap. And in either of those situations, that's not really what this is meant to do. So I think you do have to separate. I think a lot of the failure rates are based on people not actually running a good pre-ICO development of getting this thing moving and scaled with a community that's passionate to ready to jump into this thing. If you do that, then I think then we will see that change. You have very similar failure rates in regular crowdfunding, and it's not because of bad projects, it's because of lack of preparation.
I totally agree. I mean, there's an institutional raise I'm involved with now, and a hard cap of 300 million, and I would say we're looking at the roadshow as being somewhere between 80% of that institutional based. So it's a different kind of marketing, but it's a marketing that's normal for, you know, being from a financial services background, you do. But that also shows a maturity in the market, because we're now seeing sort of the big players coming to the community, which makes it frankly more trustworthy. And you know, as mentioned, the banks as supporting Ripple also gives it credibility in general.
So I'm sure most of you have heard about BitConnect. This is a classic example of a magnificent marketing campaign, but a spectacularly bad product. And It's actually, in my opinion, quite a good thing that people got burned by it, because they know what to look out for now. They know about the sort of snake oil salesmen who are selling something that is too good to be true. If something is offering you a 40% return in like 3 or 4 weeks, like BitConnect is promising, you should probably think twice about that. And as I've been saying before, dig deeper. Don't be taken in. Hopefully, these projects will gradually get eliminated, particularly as we've been talking about with smarter money coming in, not just your retail investors who've got maybe a few $1,000s to throw at something. We're talking about companies and institutions and individuals who have many millions of dollars to throw at something. They're not going to be taken in so easily. They're always going to be doing their due diligence, and they're not going to fall for slick marketing ploys quite as easily.
Okay, so just to be again a little bit objective, you guys have mentioned one very important thing that ICOs provide through the marketing activities that you just mentioned, and that is they build communities of users, of programmers, which is absolutely key to develop your company if you're in this field. And that even smart money in the form of a venture capital fund may not be able to provide as easily.
I mean, you don't have to necessarily build a community. If you're B2B, you're not going to have essentially a community. However, if you can build a successful bounty program that gets people committed and really, much like as part of a political campaign, they're completely baked into your concept. They see this as completely disruptive for the vertical. It can have the same kind of influence that in a sense, that is a community, but it's really tied to tokenization and giving them an incentive to be an active participant. So having that successful bounty program, whether it's B2B or B2C, I think is equally as important.
So do you guys want to talk about the changing environment right now, the regulators, the prohibitions, the obstacles, or first we're going to talk about KYCs and anti-money laundering? Because I don't know if you guys are aware, but until very recently, people who could go into early stage had to be mostly accredited investors, i.e. you needed to have income which was above $200,000, $300,000 per annum, and you had to have assets of around 1 million. People who had that represented only 1% of the total world population, i.e. if you were excited about something, if you wanted to participate in it, you had to go through an intermediary, or it was totally impossible for you. And even for that intermediary, i.e. a venture capital fund, if you were not an accredited investor, you would not be able to participate. So the crowdfunding and ICOs have changed that completely, but on the other side, suddenly we had a lot of people who, in many instances, had absolutely no idea what they were doing. They were just hoping they were going to become rich very quickly. And that is a real problem for the regulators, because eventually they will have to do something about it, because people are going to be unhappy, and there's going to be another revolution. So maybe let's talk about the necessity, because I mean, one of the beautiful things of the cryptocurrencies is that it's all anonymous, distributed, nobody knows what's total freedom, yes? But on the other side, you can take somebody for a ride, take his or her money, and actually not do the right thing. So some protection is probably necessary. So why don't we talk about that, and then let's go into the other things that regulators started doing.
I think what's important to understand is that the SEC in the U.S. exists to keep people from getting ripped off in investments. That's the whole point. That was, maybe we can talk about other reasons, but the whole reason that these regulators exist historically is because people were selling junk and people were investing in it. So that's why the accredited investor thing has been in the past, because they didn't want people who managed to have $10,000 in their savings account lose their life savings by investing in something that, if if it was following rules, that situation could not happen. So originally that's meant to protect people. I think that's not exactly what's going on right now, necessarily. I think there are definitely lots of people who don't want to see an alternate financial system, become more important than the existing system. So there's maybe some stuff there, but I do think that this is about protecting people from people who investing. You're not an investor because you give somebody money for their idea. You're an investor because you are capable of studying the business opportunity and making smart decisions, whether you succeed or fail in the end, into that. It is a process that there's things you can learn, there's things you can do better, and I think that it's important that we do have safeguards to keep people from getting ripped off. That said, if you do have money and you want to put money into an ICO or a token generation event, if we can finally start calling it things that don't have to do with coins, then I think that if you're not capable of reading a white paper, I do this at conferences when I give keynotes and I ask the audience, how many of you have invested in ICO? And then I'm like, keep your hands up if you read the white paper, and all the hands go down. What the hell is that? That doesn't make any sense. If you don't understand it, that's fine, but if you didn't do your research, that doesn't make any sense. And then on top of that, okay, you read the white paper and you saw 6 faces on the team or the advisors. Did you look on LinkedIn to see if these people actually exist? Because if they don't, your fault. Did you call them up? You didn't? Oh, your fault. These are not hard things to do right. If you're investing in the stock market and you want to invest in a stock, I promise you, if you call the company up and say, I'm looking at putting money into your company, even if it's on Ameritrade or E-Trade or something where you're doing it online, you will get to somebody who will talk to you as an investor relations person, even in a Fortune 500 company. So there should be a way to contact the people who are raising money. If they don't exist and you didn't figure that out, not really sure that should be somebody else's problem. That's not hard to do right. But I do think we should have some safeguards in place.
So are you in favor of...
or not. Poking the bear.
Are you in favor of centralizing it and having the KYC and anti-money laundering, or do you think it's an overkill?
I think you definitely need regulation in this space. You're going to find no disagreement with me there. However, seeing what the SEC is doing at the moment is a bit like watching a child with one of those toys with different holes, with different shapes, and the child's trying to jam a shape that doesn't fit into a hole.
I wasn't actually agreeing with their positions or what they're doing. That was the backstory of why they exist. No, it's complete junk what they're doing.
Sure. They just need to come up with a new model, a new way of looking at it. They need to not apply what they know from previous business models to this blockchain world. They need to sit down with lawyers. They need to sit down with stakeholders. They need to sit down with even governments and come up with some sort of general framework that isn't based on the old world. It's rather based on the new world. Without doing that, it's very just frustrating for investors and for projects, because they never really know when their project could get shut down. A perfect example is the guy who was talking about personalized tokens. Now, anyone, he was saying, can create a personalized token. Does that mean the SEC is going to be able to chase everyone who wants to do this? It's impractical. The only way to do it is to come up with, in my opinion, a new organization, one that is a little bit more knowledgeable.
So why don't we vote here on the panel? Are you for centralized KYC type of platforms? Can you raise your hands?
I think it depends on the actual use case or the investment behind the scenes. I think the cryptocurrencies potentially, where you're actually going to be maybe using this as a transfer of value and paying for things. But if it's to invest in value investing.
For cryptocurrencies, you're for centralized, KYC-based, anti-money laundering and everything else. And Ethan, you're
But if you're value investing in startups, meaning you actually believe in the business model and you're putting money into them through some kind of a tokenized event because you want to fund their business and benefit from their success, I don't know that needs to be a centralized thing. There just needs to be some kind of KYC in there. What we're seeing right now with all
But if you have a KYC, can you avoid centralization? I don't think so. I mean, if it's KYC, somebody will have access to it.
In this case, I would keep ICO investing and KYC out of it, and certainly for currency, I would keep it there, of course. But I mean, we'll see. I mean, at the moment, I mean, there were, I would say next year we'll look at more equity-based tokenization for most ICOs because investors will start demanding it. The ones that have been, that didn't read the white paper will come back and say, hey, you didn't, you know, and they'll look at other ones and say, you know, I'm asking for more because they got burned. And then, you know, obviously regulation, I completely agree, is probably, whether you agree or not, it's inevitable, and it's just when.
I think the harsh KYC AML that we're seeing right now is just also because the regulation is so unclear that smart startups or exchanges or whatever are protecting themselves from what could happen. So at least if they can prove that you exist and that you're real, then it kind of protects them, because who knows what a specific government might do in terms of taxation or regulation. You know, the SEC launching all of these subpoenas against a bunch of ICOs a couple of weeks ago was specifically around the fact that the institutional investors that invested in the pre-ICOs using a SAFT, a simple agreement for future tokens, which is, we use that in startups for a simple agreement for future equity. It's a way to not discuss valuation. It's just a way to say, I'll give you some money, and in the future, whenever you raise more money, we'll figure out a valuation for your company. The problem is at that point, it does not matter if it was a utility token, a security token, a currency, blah, 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 whatever words you want to come up with. You had a securities event happen the moment that a venture capital firm signed a contract called saying, I put this money in for this much return in equity, because that was the point of doing that, and that the SEC has every right to chase down under the current models. Does that need to evolve? Yes, but that was illegal. You know, we need a different model to make this thing happen, but while we don't have it, we have to play by the other rules.
Sure. It's going to be a slow transition, and for this reason, you have to play sort of on the same field. At the moment, for sure, KYC, AML, it's incredibly important to be compliant with this for any new project. You can ask, how can you do this in a decentralized way? There are some interesting new projects coming out that are putting identity on a blockchain. I think this could be really promising for the future of investment if everyone has a blockchain identity that they're using for KYC. You're knowing that you're not putting it into some centralized entity's hands. But this is many years off, I would say at least a decade off, before everyone has a blockchain identity. So for now, play within the boundaries.
We have very little time left, so I'm going to ask you the last question, which may be very interesting for our startuppers here in the room. Which jurisdiction do you think is the best for an ICO currently?
Generally, it's 3 markets. And with regards to regulation, these are the best markets for your ICO to register it, whether or not you have a VC already and you have an entity registered, say in an EU market, for example. To register ICO, it's obviously Singapore. Gibraltar is also a strong one. It's more expensive in Switzerland, but the other 2 are just also more friendly for basically ICOs in general. Some I've registered in Costa Rica, but that's a little bit of a wild card. So we have very little time, as she mentioned, but I only suggest to companies that are looking to do an ICO is to just do your homework. And there's a lot of resources on the web available, and not a lot of conflicting information as it relates to preparing your company for an ICO. Obviously, very important to get trusted advisors. If you can, try to get an angel to support your initiative, to support you in your advisor network, even if they don't invest directly, either through an accelerator program or not. And yeah, I think those are
it's critical because the situation is changing as we speak. Actually, from what I know, Singapore is a sandbox. Gibraltar claims that by the end of the first quarter they would have had, because it's already second quarter, and I didn't check it recently, full-blown legislation. They have done a very good job for gaming, so they had a really strong basis. There's a very interesting sandbox in Bermuda, for example. Hong Kong seemed to be an interesting legislation, although China is behaving in a way which kind of makes it a little bit difficult right now. So that's probably it, but the general advice would be that if you think about an ICO, think twice, think very carefully, because from my point of view, as you said a second ago, the best combination would be to have smart money, i.e. somebody from the venture capital industry who you've checked, you've done the due diligence, you know that these guys are really good, and not vulture capital. And at the same time get advisors who really know what's happening in this field on a daily basis, because things are changing very quickly. Do you have any questions? Go ahead.
Just regarding your last question, what do you think about Malta and Estonia here in...
So these were the two that I would have added to the list, actually. I think Malta is obviously very interesting because it's operating in under EU framework, but it's got some very inventive and new ideas. And Estonia has, again, lots of great ideas. I'm not sure how many companies are actually based there at the moment. I think it's still quite low, but they're doing their best to become a completely digital nation. So they've for sure got a lot of attractive benefits for anyone who is going to locate there.
Okay, thank you.
In Malta, the Prime Minister himself is personally interested in developing this field, but they haven't really gotten very far yet. And Estonia, I totally agree with what you said, but you can think of it as E-Stonia, because they're really doing some amazing things in that area. Okay, the time is gone, so thank you very much, and hopefully you're going to be very successful in whatever you decide.